This conference will now be recorded.
Hello everyone, this is Trader Joe, and today I'm going to show you how to scalp with very high probabilities of success using deviations on your chart. The chart you're looking at is not the solution. That's just happened to be open. Actually, I'm going to close Ninja Trader for the day. Done trading then. Okay, so what I'm going to show you will allow to get results like these, winners in a row. This actually went more than I thought, and you will see the target. Notice that I don't have stop losses, but that's me. I do not recommend not having stop losses. It's just that I have been trading like this for a while. As you can see, the date here is 2017. So even before that, I've been doing it for a while. So use a stop loss. Okay, here's another example. And also, I have used it for um, creating binary options. So when you see the negative numbers, that's the cost of getting in, and the fees, and these are the closeout price, and the profits. So the difference that day was $800, and that took me from 8:14 to 1:14, 5 hours work. And another example, more. And if you follow the rules, you can also get these results, right? And you see, I've done up to 70 in a row. These that are less, these have been higher lots. And it was not uncommon to have $1,000, $4,000 day. Of course, it depends on your account, right? Okay, so that's that. Now, let me show you how this is done. Okay, so this is used in statistics, and it's called standard deviations. And you have a deviation 1 level, 2 level, 3 level, and beyond. And also you can go negative, negative, negative. So what does this mean? Well, when you have a price, I'm going to show you in a second a setup. When you have a price, think of it as the medium, right? So this also applies to the method of return to median, which is or return to the mean. It's been around for decades. None of us that you know have invented this. It's been around forever, um, especially in statistics. But when you apply it to trading, they have found that the price lives in an area from a +1 deviation to a +2 deviation. So 68% of the time, 0.27, the price is going to stay here. But if the price goes higher, it's going to pass the 1 deviation up to the 2 deviation. Now you have 95.45% of chance that this price is going to drop and it's going to stop somewhere around here. If this goes beyond the deviation number 2 and it gets over 3, now you have 99.73% of a chance that it's going to come and return here. Think of the positive deviation as overbought and the negative deviations as oversold. So if we were to put this sideways, the +3 will be on the top, the medium there, and then the -3 will be on the bottom. So how do we apply this to trading? Well, I'm going to show you the transition that I'm going to be talking about today. Okay, So we all have candles, love them or hate them. There's candles, right? And that has been around for quite some time. And I sometimes also use just candles, like an MT5, where I just bought the Renkos for MT5, but you can use very clearly the retracements there. You see us kind of a support there and a retracement there. So you have candles, right? But I haven't really traded full time with candles in a long time. Okay, so I'm going to take you from this to this is the actual setup I'm going to talk about, where you can get above 90% profitability, profitability, and then we're going to move from this, which are candles, to the Renkos, which is going to look very nicer, to my template. This is my template, and this is what I'm going to give you. Okay, I think we should change this not to a 233. I'm going to teach it both ways. I'm going to teach it the fast way, the 50, which is the original way. And if you want to trade like the Nasdaq, then you will need to change it to a 233. But we're talking currencies here. Okay, so let's start with this. So what are we talking about here? The red here is the equivalent of the upper deviation. This indicator is called a PB channel. I don't use a PB channel as a guide currently, but I use it as an alert for the highest deviation. Okay, and I'll explain that in a second. See, like there's a little cross, very hard to see. That's over 3%, 3 deviation levels. So if you double click here, you will see the band deviations right there. It tells you. Okay, so that's 3. Now 3, you're gonna miss some of the trades because not always you're gonna have price pierce in the 3. So you may have this as a trade because we consider a trade once it pierces this band. So I'm going to change that to a 2, and you'll see how this is going to become, a setup. Oh, you see? Okay, so that to me is a setup right there. Okay, these are setups, and you see there, that's an indication that something's happened. So for us to see this better, what I'm going to see, this is a template, the original template that I learned from back in 2017 or 16, something like that. Okay, so what I'm going to do, I'm going to make those stars bigger, and I'm going to make the bands bigger. Okay, so there. Okay, that's a little bit too much. Let me change that. Just don't like it that big. Okay. Okay, so so what do we do? We have the upper deviation, we have the mean in this dotted line, and we have the other negative deviation. So this band is green. So when you have a setup like here, you buy, and it's red, so you can sell. So you can see this setup here is a winner, and this setup here is a winner. This setup here is a winner. This setup here is a winner, and I will explain why. And it doesn't matter where you look at it. I can tell you this is a winner right there. I do not counter trend ever. People love to counter trend, and then they lose money and they wonder why. Well, because when you counter trend, statistically, there's less than 30% probability that you're going to win a counter trend. Sometimes you do, sometimes you don't. Most of the time, you will not. With a trend, you increase your chances of success, and that's what you want to do. You just don't want to take blind chances, you know. You just want to be an informed trader. Some say that um, trading is like gambling. Well, I lived in Las Vegas for 6 years. I'm not a gambler, but I will tell you that a gamble is what the word says, a gamble. It can go either way, and the house always wins at the casinos. But here, if you apply yourself and you study and you're disciplined and you follow the rules, you have the odds on your favor, and most of the time you will win. Okay, so what is the setup here? Okay, let's go for it. You also have this moving average of 50, right? So this is your original template. Below you have stochastics at 7, 3, 10, but you also have a moving averages. And these crosses are going to be important as well as these X's and where the candle is and where the moving averages is. So you have a few components, but once you do them several times, you know, several trades here, then you know it's going to be like second nature to trade this. Okay, so where's the setup? A setup. This is a setup right here. Why? Well, first of all, you need to wait for the candle to pierce this channel up. But if you look at it, when the first pierce here and it goes down, you don't have the moving averages pointing down, they're pointing up. So that is not a trade. Okay. So you wait for the other one here. And you say, well, that's piercing. Okay. But it's not a trade. The trade is confirmed when you have that cross. So even though it's a little bit late there, but you can consider going in the minute that it crosses the band. Now this is a little pushing the envelope because one of the requirements to have the price below the 50. So it's kind of very tight, okay? But it is a winner because what you do is you take your entry, let's say you enter somewhere here. What you do is you measure how much you have here, in this case 7 pips because I'm at the 1 minute. The only reason at the 1 minute because I'm scalping and also I want to see a lot of setups so I can show you. So what you do, you target the other band, but like 1 pip before the band finishes, and it may work against you a little bit, like 2 pips, but eventually that price, that level gets hit. So if you were to target like 1 or 2 pips above that channel, you know, right there, that's when you collect, and you will and you will collect as many pips, in this case 6 pips. Okay. The beauty of this is that you can go higher, and those 6 pips of profit could be 60 pips, could be 300 pips, and I will show you that. So you may just trade once a day and just go in the market at your convenience, as long as you have the account balance. So that trade is a winner. Okay, that trade is a winner number 1. Okay. So remember, one of the rules is to have the price below the 50, but this is not a trade because it's way below. We need to look for piercing of the upper for sell and no more than the medium to go short. Okay, so this is not a trade because even though it barely pierced it, the price is above the 50. So what happens is here you could have this is hard to see. This trade will be hard to see, but this is a very big piercing. Okay, if you're using some other method, yes, you will go long, then you will go short, right? But we're talking about this particular method. So these are not trade. Let's look at this position right here. You have a lot of candles below the channel. So now you see these X's, which means that has surpassed the 2.0 deviation, and it's giving you an alert. Okay, so you have the X's, you have the candles below, and now you also have this cross here. And you can even anticipate a little bit when you see that is turning. The other thing is that when the cross happens, see here we have 50 in the middle, the medium is 50, this is 80, and this is 20. The higher the cross, the stronger the trade. See, this trade happened kind of weak, you know, a little bit in, what is that, 57. Okay, so 57, when that cross happened, more or less, yeah, it gave you 6 pips. But this was at the 20 going up. So this is going to be stronger. Another way that you can get your money's worth is if you go from this cross to this cross, okay? And that will be here. So that would have been 15, 16 pips if you would have entered the band. What I used to do is, like, if I see that this is piercing, what I do is I anticipate the move and I put my pendant order there and I target that. Okay, and I get profit with 15 ticks. So this is trade 1, number 2. Okay, we continue. Now we know that we have 2 trades and we won both. So you're looking for these crosses, right? Here you have a cross, okay, and here you had the price leave the area and it's above. You could have, but no, you have to wait for that cross to increase your chances of success. This is at 36 out of 100, so you still have possibility of this moving to the upside, and it does. And if you were to exit where that crosses, you would have exit up here for approximately 33 pips. Now this is also a winner because when you mark the cross, you could have entered here. Now what happens is the following. I said that the rules go up to here, like 1 or 2 pips before the band, and you have a winner. Okay, welcome, Koja. And what happens now is you could just take that win and forget about it. And you can see here it goes against you a little bit, but you have everything, working for you. So you just hold. You already have a risk defined, and now you have 3 trades. That's 100% so far. Now, what I like to do, what I always say to do is if you see that this is still working this way to the band, just keep moving the take profit, and now you have a higher, now you have 21, right? But so the second move would have been here, from here to here, okay, for a higher take profit. But you see this right here? If you were to hold until these crosses to the opposite side, then that would have given you more or less this candle. Now, if you would exit here, now you would have gotten 32, 33 pips, you know? So the third trade approach you could have done is that one. So now you have 1, 2, 3 trades that this one you could have played in 3 different ways. Okay, so I'm going to go again for the next setup. I don't have a setup here because what I'm looking for, Kojo, is the price to be piercing this band. Okay, And also I'm looking for a cross. So even though I have a cross here to the upside, I don't have, and the price is above, I don't have this price up here, says band. So this is not a trade. Now, this trade right here, this trade is in a range. It's in a range from here to here. Okay, so before that happened, that was before, what I mean is before this happened, this was the range. Okay, so when it breaks away from the range and they start giving you these X's, this is your alert saying that I went beyond, hello, Linda, I went beyond the 2.0 deviation. Let's see who's on board here. Yeah, Koja and Linda. Okay. And so I went beyond. So what I'm looking for now is that even though I'm in a range, this is up to you if you want to take this trade, because, you know, to go short here, the price is not below the 50. But what you do have is the price have pierced. You have 3 alerts of a Pearson, and then you have this price coming down. But more importantly, this is your confirmation that this is going to drop. And if you were to take that trade, this cross right here, I would have taken it. Okay. So if you would have taken anywhere around here, your target is down here for 15 pips, not at the green, but like 1 or 2 below, and you get hit with a take profit. So I'm going to take this out. I'm talking about a range, and I'm going to talk about the winning trade here. Okay, that's a winner. So now we have 1, 2, 3, 4 winners. So far, 100%. And what I like to do is, what I was doing here is that if you have entry and a cross, look at this crossing too, because if you were to wait until they cross to the opposite side, you don't have, you know, like 14 or when the candle hits 20. No, you will have 32, 30 pips. Okay. So if you were to do that with this trade, yes, you can exit there and take your money, and that's fine. Nothing wrong with that. But if you want to see if you can get a little bit more, the greedy devil, then you will exit here. So now you will get an extra 3 pips. So it may not sound a lot, 3 pips, but if you, I'm 1 minute, but if you're in the 15 minutes or 30 minutes, that difference could be 60 pips. Okay, so the trade number 2 would have been from here to here. That's another winner. Okay, this is sideways, no perforations. Here we have a perforation. Okay, so number 1, you look for the candle to pierce. Candle pierces channel, either here at the bottom or at the top. And because we know that the price lives within the channel, when you go way beyond the bands and you have an X showing up in the chart, you know it's going to come down. So that's what you're doing. This is a return to the mean concept, been around forever. But if it gets all the way negative, all the way to the bottom of the channel, you know it's going to come up with from 95 to 99%. So that's where you get the advantage to you. Okay, so let's see. Okay, so back to the chart. So candle pierces. We're talking about this trade right here. Okay, candle pierces. Then you will see on X is printed. That's this X. That's number 2. Number 3. You will see the stochastic here having cross. The stochastics, because this is a moving averages or moving average also. It's not only a stochastic. Crosses in the direction of the trade. So if it's in the bottom, this crosses to the top. And the caveat is trade is stronger if it's below or around the 20 or 80 mark. That means that this trade is strong. This is a strong trade to the opposite side. So the higher the cross, the stronger it is. You see this trade, you would say, okay, this is a trade, but the stochastic was pointing up. So you have to see that this is pointing up. Okay, so now the third, in this particular case, for place pending order as close to the band as possible. What does that mean? That means that in this case, I have a X, I have a piercing, and waiting for the cross. This is a bit too premature. We also need the price, looking that is going to move to above the 15. This is okay, and now I want to show you a small little trick. You see this dotted line here? When you have a cross in MT4, if that dotted line is start to point up, well, this is turning, right? And this is flat right here. And now it starts to push a little bit to the bottom. So you see that inclination here is very inclined. So you know that you're going to go short because simply it's pointing down, okay? And you can also add that indicator I gave you, where the Trader Joe trend to. Then you can see the blue dots and the red dots. So that will even help you even more. Okay, so you place the pending order around the band. The closest, maybe, you will see this halfway. Doesn't matter. You will enter because you have a lot of extension here. This is like a 3.5 or 4 even. This could be like a 4. So we are way overdue it. It's going to come back to the medium, right? What happens is it doesn't always stop in the middle, even though they stop. You see it stop, but it will continue because, as you can see, the movement, the folks that are following everybody or just waiting for something to happen, that's when they jump in. What happens is here, a lot of folks take a profit and they just don't risk waiting for something else. But the people buying, see, this is when the new buyers, the late buyers come in. The folks that got in here are selling it to those buyers, and then they take it up. So they push the price up, and some who got in here are also selling it here. And then more buyers come into and they're more selling it. And then everybody freaks out and they start hitting the stop losses. That's the whole story of the market. It's an auction. Think of the market as an auction, right? Okay, so you place a pending order close to this channel. Where do you target? The opposite band, not the band, but a few. And as you can see, that that spike hits it. If you don't get it, this candle will get your 15 pip of profit. So number 6, target opposite band 2 pips before. That means 2 pips before. So if you were doing it, so you go from here, pending order, you target take profit there. And if you're going short, let's say from here, it's just not a trade to me. But if you're going short, then your target will be down here, and you get taken. Okay. So now we have the cross of the stochastic. So let's check. We have the cross and stochastic. We have an extension piercing of the channel. Where the price, the price is moving upwards. Okay, and the price just crosses a 50. So you're going to target here, and let's just say the perfect entry would have been around there, and you'll take profit right there. If you would have played it like if you have the time, because this is very fast and you can do it very, very slow too. If you wait that once you enter and you wait until that cross is more or less there, then you have a higher trade. Now you have a difference of 5 pips. In other chart time frames, it could be 50 pips, be 200 pips. So the second possibility would be to trade it up to there, more or less. Okay. So what do we have so far? We have 1, 2, 3, 4, 5 winners. Try to stay away, when you have the 50 in the middle, okay? If you're going short, this is your zone of entry. From the upper band to the middle, that's your going short. Going long, your point of entry is from the bottom to the middle. Okay? If you enter here and this doesn't match, and this can happen, and it works against you. Okay? And if you want to go counter trend, trust me, it doesn't. I've done this for a while. You can do it. You may get nervous and you want to jump. Try it in demo. Okay. Now, here, this is an iffy trade because this is sideways and this is barely pointing down. It will be up to you if you want to take it. Why? Because you have an X printed and you have this big pierce in here. Whenever you have 3 or more candles in one direction, you have a huge spike. Most likely is that the buyers are trying to take it all the way up. But this is rejection. They couldn't keep that momentum going. So eventually what goes up goes down. And if you were to throw, let's see, a Fibonacci, well, it's yellow. Okay, you see what goes up comes down. Well, I don't have all of the I don't have all of the Fibonacci entries, but anyway, you see it stopped halfway. So instead of continuing up, the buyers cannot take the price higher, and it drops, and it becomes like a 56 pip move that you can take it in a higher than 1 minute. You can take that trade in a higher than 1 minute time frame. Okay, so if you wanted to take this, what do you have going? You're going to start becoming so efficient that you may say, okay, I do have a cross. It's kind of weak because it's in the middle. So this is not crossing all the way up here, or not going up from the bottom. So it's kind of weak, right? But you saw this spike and you saw a printed X. You may want to take a chance and say, okay, you know what? I'm going to take a chance. And I'm going to go for these 16 pips. And you get hit. You get it. Or if you have the discipline, you can drag that, take profit, and wait until it touches it. And then, boom, it takes you out with 34. Or if you had it even richer, then you can say, oh, look, and you could have had the 52 from an iffy trade. So that's not bad. So this would have been another winner right there. Okay. Now let's talk about this one. This is perfect because, well, not perfect, but you see the cross. You have this cross here coming down, and you always mark them, right? Mark them, and then look at all the rules. What happened? You have a printed X. You have price below the 50. So you could have anticipated the gun and with this curve have gone short, but you really want to stick to the rules. So you have the cross and you have the price below. So most likely, if you're quick enough, you would have taken that and take 10 pips, right? Or get out there, or if you were more, generous with your stop loss, again, get out somewhere around here. Okay, when this moves, that's how I will play it. So the first winner is let's just say here. Okay, so the first winner is there. Okay, that's one way you could have just, and that's a beauty. Now I want to show you. I want to say something else, but before I'm going to show you. Okay, number 2 could have been up to here. There. Okay. Number 3 could have been down to here. Okay. It's another winner. Now, exits, you could have exited when it went down and it reversed. That would have been one exit here. Nothing wrong with that. Or number 2, you could have exited, if you would have stayed, you need to exit when it goes down, so it would have been somewhere around here. Okay, so you're gonna get experience, and then you will play by ear. Now, what I wanted to say is this. See if I can get these out of the way. What I wanted to say is, for me, once I see it's going to take a while. Well, this is not aligning properly, but sometimes what you do have is, when you have the price below the 50s and the 50 is above the channel, I would just keep the position until the price is on the opposite side, but it doesn't happen. You see, it doesn't happen until way later. So scratch that. Okay, so is this a trade? Yes, it is. Okay, so that's another winner here, potentially up to there. Is this a trade? Yes. Why? Because you have 2 prints. You have the price piercing 4 times, 5 times, and then you're going to see that this is going up. It very rarely goes to 100 or 90. It usually stay between 80 and 85 before it starts coming down. So you have the cross here. Well, have the cross there. Okay. But you could very well have anticipated the move and you got it in here. So that's 12 pips, more or less. And it gets done there. Another winner. Or as long as the price is below the 50, you could have hold. You could have. I usually take that. I would take that because it's not pointing down, it's not pointing up, it's pointing kind of sideways. So I take the money and run. So that's all I'm going to say about this one. Okay. And if you would have held until here, then you see you will lose a few pips. Okay. So more importantly, you have to see where in the session you are, because for the pounds, this is the Asia session, right? So for the pounds, look how much money you have here. A lot of money there. This is the London session. Okay, so there's a lot of activity here, and there's a lot you can do. And this range right now is 132 pips. Okay, is it? No, or is it 13? Yeah. Oh, no, that's the price. It's 28 pips. Okay, that's the range. But you could have scalped this many times. Of course, if you go higher, you know, it it will be more pips, the range. But it really doesn't matter, in my opinion. If you don't scalp the Asian, you can scalp the London. It's pounds, right? But you can also have nice moves in New York. So if you're in trading the Asian, it's perfect for the yen pairs, yen, and the pounds, London. This is London. So the range goes from 28 pips to 80 pips, 83 pips. Okay, and you already know where to go and get the volatility. Okay, so if you apply the rules, you're always gonna get a nice trade. Like there, I marked there and not this because this price is still above the 50. And now I can see the curvature of the middle coming down. So I would take this and I could keep it until here. See, this is where it closes, more or less. Okay, so you could have, when you see the reversal get out, right? You could have more or less, in this case, 10 pips, or you could have just do the safety one and just go for 5 pips, or just drag it until you get hit. You see, there's many ways to do it, right? But one thing that you don't have here is a printed X, but you had it before. So what this means is that the price has gone all the way up, okay, within this range of 3 deviation, actually 4 deviation. And I say 4 because that's the range that it works in. Okay. So again, another winner here, or up to there. Depends how you trade it. That's the whole thing. That's the whole concept. You have your rules, and optional, trail the take profit along the band. Okay, so yeah, I did everything. Okay, anyway, you get the idea, right? So, candle pierces channel, an X is printed, stochastic MA crosses in the direction of the trade, which is stronger if it's below or around the 20 and 80 mark. The price is above or below the 50 MA, okay, and place the pin in order, so close out the band, and target the opposite band 2 pips before. Okay, so those are the rules. Okay, now this is with candles. Okay, let's take it one notch up. This is with wrinkles, and this is GJ, and let's make it 60. See what that looks like. Okay, and this is 3-level deviation. So first, we're gonna make these bigger. And this is not the template I'm going to give you, okay? So this looks kind of yucky. You also standard, well, I kept the 2. Okay, good. So now you have a nice setup here on the 60. So what do we have? Let's take the change of trend. The trend changes whenever the price is below the 50 to when the price is above the 50, okay? So this is a clear short. This is a clear long. Let's work this short. Okay. You see, it doesn't matter. I just keep scrolling because it doesn't matter how far you go. You're always going to find a setup. So where's the setup? Well, you can argue this is a setup, but I don't know, kind of weak. This is a setup right here. You got the star, got the price piercing, got the price below, you have the cross of the statistics. Okay. If you sometimes you have this and this has not crossed, but you see that it's moving, you can just take the trade. So if you take the trade again from there to here, it's a winner. Or if you take it down to the close, the reverse here, that's a winner. Okay, so this is what it looks like with that. Now, the other thing you can do is, in this case, the trend is so strong, you could hold until until you see like a major reversal, and before the session ends. So this big move, you could have hold that trade because it's below the MA50 down to here. Okay, so you could have done this trade. That's another winner right there. We got 2 ways of trading that. Now, next, is this a trade? Yes. Again, we have everything. That printed, piercing, price below the 50, and you have a cross. The cross doesn't happen until a little bit later, but you have most of it there. You have the cross going down, the cross going up here. It's below the 20, so that means it's going to be a strong move to the upside, and it is because it's going against a trend. I do not trade that. Okay, so this is another winner. So I think everybody is getting the idea, right? I hope so. So that's my little dog. Okay, so here's another one. Kind of weak, but it's above the 50. Okay, but let's see. The trade crosses there, but you do have an X printed. You have 2 candles piercing. The price above the 50. That's a trade right there. So this is your target, and it gets taken there, or you can go up all the way up to the end of the session and exit somewhere there, because here's the other cross, and this is the same way you do it over and over. Well, that's kind of weird, but this guy here, it's a nice trade. Okay, 64 pips. 64 pips. This trade 67 pips. This one is aggressive, but it doesn't follow the rules. Okay, so here's a trade. Initial 56 pips ends up being 103 pips. Okay, 63 pips, 81. And this, my fellow traders, this is pound yen. So I'm not talking anything that we don't know. And this is exactly why I trade the yens, the pounds. If you had that at 120, it's going to look different, but if you had a trade like this here and this cross right there, and your entry there is going to go against you 30, 40 pips, but it will give you 126 pips. So what you can do is this. You can go short here. Okay, with the least 0.01 or 0.5 or 0.10. Don't go with the one lot or two lots. But if you see this is strong, then do another entry right there. If you see this continues, do another entry, and then do another entry. Now, this is how I can get, of a 40 pip move, I can get 120 pips. How? If I would show you in this trade. In this trade, I would have done first 139 plus 125 plus 100 plus 20. So instead of getting 120 pips, I would get 300 pips out of that move. That's how you make the money, the big money. Okay, same here. If you have the good fortune of entering here, right, and you see that the price is well above the 50, hold as much as you can. Hold as much as you can, if you can have the discipline to do that. We're under 120. So instead of having a 119 pip move, you could have a 215, or you can have, I don't know, a 279, even though it goes up to 300 pips. Okay? And imagine if you would enter down here. Again, it's always the same here. You enter there, instead of 117, you have 218. So what I just given you now is basically no excuse for not making money. There's literally no excuse not to make money. Okay, so that's 220 pips, that's 300 pips. The higher you go, of course, the more you're gonna make. If you enter here and you were held until the trend gets flat here, that would have been 1,300 pips. Okay, that's how we do. That's what I was gonna say. If you enter short here, wait until this angle becomes flat and then consider exiting. So here the line is flat, but now the price goes above and start going up. Well, your entry would have been here, right? So you will go here and you will get your 300 pips. That's fine. And you can have exit here. But in this case, instead of your 400 pips, you could get 900, or I don't know. If you wait until this line gets sideways, you have 1,000 pips. Even though it went up to 1,500 pips, I would exit there. That's me, okay? But that's my experience. Okay, so now you have the tools to start making money consistently. And I really don't care if you're in a 15 or in an 8, which will be very fast. But let's just say, very low, 30. Okay, so that's 30. No reason for not making money in London and Asia here. Could have made 32 pips or 48 pips, or if you were held until that trend line becomes flat here, you would have gotten 75 pips. So there's no excuse, really. Same thing here, going down. See, starts going down. You look for your entry right there. You wait, then you go down and you hold. I will still be holding this. And that would have been 59 pips. So that's two trades, two winners, no excuse for not making money. Okay, so the final design, what I'm going to give you is this. This is how I see it. Okay, so let's mark this up. Let's see, this is 50. Okay, this is Asia right here. Now, there's a big, big difference here. I'm going to give you the cherry on top, which is using something that is called the bubbles. This comes courtesy of trader Ken from Australia. Thank you, Ken, who introduced me to a group in LA, veteran traders that have been doing it for a while, and they opened the eyes to this trade. And you have seen this in some other website, you know which one, but he doesn't have all of the rules. And the rule you're looking for is to see bubbles. Not one, but two. When you have two bubbles, and you'll see that in a second, you have a strong trade, and you have almost 100% probability that you're going to win that trade. Okay, so what does that mean? You see here these channels. Well, this is a bubble because let's just say it. Okay, because that's a green. Let me take this out. Okay, so see the bubble dotted line goes beyond that green medium, and it forms a bubble. You know, like a bubble. But what you see here is that you have the other channel also forming a bubble, but these two bubbles are within the channel. Something happens when you have the bubble above the channel and you have the other side of the bubble go above the green line. This phenomenon is known as a double bubble. When you have a bubble outside, you have a bubble inside. Sometimes you have deviations so bad that you have both bands outside. Let's see if I can find one. See, that's a strong bubble right there. You see, almost outside. This is strong. I don't know if I have one. No, I don't have one. Sorry. Okay. So on the upside, even though you have a double bubble, we're in a downtrend. So do not counter trend. But the green line has gone from flat to start pointing up. So what are the rules? The rules are we want that price to be above the 50 EMA. But this does not line up because the stochastic is pointing down. The first indicator that we have is indication that we have that is going to be a good trade is this cross. Number one, that cross. Number two, we have a double bubble. You know, we have a bubble. And sometimes these bubbles can go long ways, you know? So what you're really waiting for is for this bubble to start pointing up, okay? And it is pointing up right now. So it's going to close at one point. You also have this star. which is the star that you had in that ugly template, which was, you know, purple. And let's see, you have the double bubble and you have the price above. So anywhere around here, you can enter. Okay, and this is your target. And this target, GJ, at 60 is 57 points. And does that happen? Yes. But if you remember, if you wait until these cross again, you will not exit until here. Now, nothing wrong with have taken 57 pips, but look at all this strength. It doesn't stop up to here, but that's a little bit too much into over the session. But what you're looking for is trailing that take profit here. You trail and you trail and you trail, and you get out there, which coincides with the opposite of this right here. So your trade is somewhere there with 124 pips. Now, this happened on Monday. Okay? The other thing you could have done is, wait until you start seeing a lot of retracement towards the mid 50s, right? You could have held into the next day, but it's just too much watching the charts. You can also use the EA that I gave you to trail this overnight. Put like 50 pips or whatever, 40 pips. Okay, where's the next trade? Well, the next trade is right in front of you, right here. The price is not above the MA. This, even though you can argue that it's a piercing and it does not have a star. You can argue it's going down. You can argue that you could have do this and eventually it hits. But in the meantime, it takes you back 30 pips. So I don't know what your risk tolerance is, but why not wait for the rules? So the rules. You have to cross a little bit late in the game, but you know that this is started to turn, so this is a good indication. The piercing is already outside of the channel, so your pending order should be in or around the bottom of the channel, so you're still good. You have the confirmation of the star, have the price above the 50, so you're going to go from here to here, 57 pips, boom, it gets it, right? Or this is the same trade as yesterday. Or you wait until you cross there and you go for the whole shebang, 71 pips. Now, this happened yesterday. So in 2 days, you had, what was this? 170 pips, okay? And today I don't see a trader always setups. Now, for you to practice, I do recommend, so you don't wait all day around for this, to give you the perfect entry, practice at the 30. 30 is going to be very fast, but at least you can do that. Now, you may want to find yourself something that you can just click and it will have the take profit set up for you and all that, and you do it. But I'm going to look and see if I have something. Okay, but here's a trade, practice, double bubble, put the farm in because you're going to make it. That's 30 pips off. And if you were to hold 60 something pips, but you're going to get experience, right? You can hold up to here when this starts going too close to the 50 and get 50 pips